Okay, Mokama Sunday service. Today we are talking about my worst trade of the year. And then we're going to kind of go over gap downs. Like today, I'm going to do it a little bit different. It's going to be less slide presentation. I'm going to go straight to my trading account to show you what happened to me when President Trump got elected. And this isn't about politics, it's just politics specifically related to a trade that I had on that screwed me personally, right? And it was my fault though, like it always is your fault. Like when you're trading, it is not the market's fault, it is not whoever voted's fault for your trade. Like you should have planned accordingly. So I was in a trade on gold, specifically through the futures, GC. Can you see my account, Ange?
Yep.
On my screen? All right, right. So I got in on this bar here. If you followed my channel, you understand my trading strategy is to swing, and this is swing trading, right? This isn't long term, this isn't investing. My strategy is to get in on these big candles down, right? And so that's what we have here. Something that's trending upward and then that has a really negative day. So I got in on this day. It pretty much went nowhere for 1 day, 2 days, 3 days. And let me zoom in a little bit more, all right? So 1 day, 2 day, 3 day, it was pretty much sloshing around. And the election was on 11/5, right? So on this particular day, I didn't like how my aggressive position was going. So I did cut my aggressive position. So it wasn't as big of a loss as it could have been if I didn't cut my aggressive entry. But I still have my conservative entry, which was my biggest leg, right? And then, so I wake up the next morning, of course, and Trump won the election, and gold is it's like a hedge, right? So I don't know what I was thinking, because my rules tell me that I'm supposed to get out of my trades before a volatility event. And I don't know why I didn't perceive the election as a volatility event. I should have got out of this trade on this day, right? Because like if the Fed is announcing something, I usually tend to try to get out of my trade. What else is something? If earnings are happening, I tend to try to get out of my trade because those are volatility events. I don't know what's going to happen, and so you just don't know whether something's going to go up or down. I don't know why, for the life of me. I was really busy this day. I don't know why I just didn't exit this trade on this day, even though it was down a little bit. I even talked last week, and I even said it on the last episode that I was thinking about getting out of my gold trade. So I have no idea why I didn't actually get out. And so we're looking at the futures. So this doesn't look like a gap. So I don't trade the futures, but I trade GLD, the ETF, which is based upon the futures. So just to show you what GLD looks like. And I trade with options. So with options, you cannot trade after hours, right? If the market closes and then the election happens and they announce who wins the presidency, I can't trade my option until the market opens the next morning. So I'm trading GLD, right? I get it on this day, and it shows you that it's similar to the futures, except the futures are open like 23 hours, right? And then it's chopping around. I sell my aggressive portion this day, and then I wake up in the morning and look where it is. This is what we call a gap down. It gapped all the way down. So I hadn't hit my stop loss yet, and I don't even think I was anywhere near it. I think I was down maybe 5 or 10% on my conservative leg, so I was nowhere near my 25% stop loss. And then I wake up in the morning, and what do you have? I'm down 80%. So this is something that can happen if you are trading shares and you don't trade after hours, or if you're trading options. This is why I need to get out before volatility. That's my lesson. I really need to pay attention to any volatile events that may potentially happen. And what really happened is everyone sold off gold and they start buying up the rest of the market. And so I'm not really pissed because let me show you. So my accounts, right? Actually, let me break it up. Let me show you my trading account. My trading account, that gold trade was down $2,300. And this is also why I talked about last week position sizing. Like, I sized my account to where one trade can't kill me, you know. And then FYI, I did get in a couple of trades on Friday. Wells Fargo pulled back finally, got in there, and then IYT. But and this one is like pretty much almost even based upon the size that I took. But this was the big gap down. Nothing I could do about that other than get out of that trade before a volatile event, which is in my rules that I did not follow. So I lost some money. However, the rest of my stocks gapped up, and I am up 37 bands on the year. So I was pissed, but I wasn't really pissed because my Shopify leaps are popping. My Google leaps are popping. And that Nvidia trade that I told everybody about is popping right now, right? So I'm up on the year like 37K. So I'm chilling, but I would have been up 39 if I just would have just exited that. What trade was that? Where's gold? If I would have just I don't know why it's this way. If I would have exited this gold trade, like, I would have been doing a lot better. But you know, also the election matters, specifically in terms of who was elected, because people perceive that Trump is better for the economy. So once he was elected, we had this big run up in like all of the things that I pretty much own, even ELF. But ELF reported really amazing earnings a couple of days ago. So I was down on that, but now that kind of popped back up. ELF, I guess, versus ELF. And then ASML is probably my one laggard. And I'm just showing you my book, and just like I kind of show you this stuff, but like, so most, I would say I'm like 80-20. 80% of my stuff is doing well, and then 20 I got some laggards. But I try not to look at my long term that much because ASML is down, but I believe in the company because it's specifically the industry that it's in, the semiconductor space. Just talking about what I own. Costco is slightly up. I just did released a video on YouTube Short about how much I love Costco as a stock in general. And then ELF, I like it because the makeup space, I think, is recession proof. It is a smaller company that is growing in the space that I think it's making what? I think it released earnings of like $330 or $300 million this last quarter, which is nothing for like an S&P 500 type of company. So I definitely think it could claw some market share from Sephora and Ulta and a lot of those brands, and eventually become one of those brands making billions of dollars per quarter. So I think it has a lot of room for growth. And those are my names that I'm holding over 5 years. So that's why I try not to really look at what they're doing. I think in 5 to 10 years that they're going to be bigger. I don't think the semiconductor race is going to be over in 5 to 10 years. I think this company is going to be bigger. I think Costco is just going to keep getting bigger. And then I got some leaps on things that I believe in, like Google. And I think Google got a lift as well because it has DOJ issues, but that's a DOJ issue under a Biden administration. So would that same issue play out the same way in a Trump administration when people perceive Trump as being more pro-business, and a lot of the business leaders were kind of on his side this time because they want to take advantage of having an administration that they helped get elected, right? So like if you look at Tesla, that I fundamentally don't really like, but look at the pop that it had a gap up, right? So conversely, Tesla had a gap up. Google, you can have Google had a gap up after the election. What else went up in my stocks? Nvidia. Did it gap? Nvidia didn't gap so much. It did go up, a small gap, right? But just to show you, that's what the stock market, the stock market liked the Trump election. Like, politics aside, look at that big candle up, right? What did the stock market think of the election? Look at the big candles on the Nasdaq, right? That's the fifth, the sixth. Bam, when we know he's president. The Russell, the fifth, right? When we don't know who's president, the sixth, we know who's president. Bam. And then the last, the Dow, right? Bam. We don't know who's president, we know who's president. So the market is positive on Trump's election. And then that actually makes sense as to why gold went down, because it's a safety. And so gold went the exact opposite direction. So, like, I don't know what I was thinking. I should have got out of that trade, but you live and you learn. Now I'm going to be more cautious about volatile events and making sure I get out of my trades before earnings, dividend payouts, Fed meetings, things of that nature. Be more cautious. And I also think I'm going to be taking spreads more often. It's harder to find stocks that are liquid in terms of like getting some liquidity, but I'm just looking at gold specifically and going to go look in the option chain. I had the opportunity to take a spread because it's really liquid on the option chain, and to have cut my losses, or not cut my losses, but to mitigate my risk a little bit more, I could have took the same size with the spread on GLD. So going forward, if there is ever an option to take a spread versus strictly buying calls or puts, I think I'm going to go that route, right? So that's a lesson that I learned in my own trading, right? But I am happy that the market is up in general. So I am still up more than I am down, right? Yeah. So, Ange, any issues, questions? Talking about gaps, how to avoid them?
No, not at the moment. But with the spread, though, I would say the only it's not a downside. I would say, but it caps how much you can make on any trade, right?
Yes, to the upside. So you got to take more size if you want more upside.
Yeah, but it's a protection.
Yes, but there's less risk in taking more size with the spread.
Yeah,
So,
I
like,
get it.
you feel me? Like, and let's just say for me, with the size that I'm taking, a good swing for me is if the trade ends up making me like $1,000 to $1,500, like if it runs. And you can still play spreads the exact same way. So, like, let's say my budget for my spread based upon my account size, and I know for a conservative position right now, my budget is around $3,200, right? For
Yeah,
aggressive position, it's around $1,400. So I just need to buy that amount in terms of the spread. So if my budget is $3,200, and let's say this spread is, I'm just giving a hypothetical on gold right now, is about $1. That means I'm going to buy 32 of these.
yeah,
And then if I hit my 25% target, I'm going to take off half. I'm going to sell 16, or buy back 16, I should say, right? Because I'm selling the spread. Let me move
yeah.
that. And then if it keeps running, I could potentially let it run until expiration. If it goes all the way to expiration and the stock price is favorable, and keeps going in the direction that I want it to go in, or at least even stays sideways, I'm just going to keep gaining and eating up that premium. So time is on my side as well. And that's another thing. Like, even though gold kind of had a pushback up, the time decay that came off the option, I'm not going to get back. So I'm holding that position, and I never do max debit, but I'm willing to just do a max debit on that option to hopefully we have a day or two next week where gold pops back up, and then I get a chance to sell to kind of to get back half of my losses, right, in that
And,
particular
and
position.
Is max debit just hanging on until the expiration of the option?
Yeah, right now my option is going to be worthless at expiration. So
Yeah,
because it's out of the money. I
yeah,
bought it in the money, and then after that gap down, it's way out of the money now. So
yeah,
I'm hoping for a pop up to a key level where I could sell at like 50% loss instead of at like a max loss on the option.
yeah.
And that's the way that I'm working it because I'm running out of time. My expiration date is on the 15th on Friday. So I got what, five? I don't know. I'm sorry. Where is that? I got 5 days um, for this to pop back up to get out at a more favorable to get out at a more favorable price than what I'm currently at.
Gotcha.
Because look, I'm way out of the money now. I bought this thing when I was like right here in the money because I always buy in the money, and now we're
Yeah,
way out of the money because of that gap down. Right? So it is what it is, but now I'm just managing my position, trying to see if there's any opportunity for it to come up. And I'm still trading to the upside using my same strategy. I just gotta follow my rules and try to stay out of volatility. Like I'm ideally trying to trade things after earnings or before earnings, but I don't want to be trading them through earnings or through a presidential election, which happens every 4 years, which I just learned, on a first-hand basis.
yeah.
All right. All right, so since we went over that, let me give you my disclaimer. This is for informational and educational purposes only. As I just explained to you, trading and investing is risky. It does involve some risk. You will lose some money. I am not a financial professional. I advise you to speak with your financial professional and advisors regarding your trades and investments, and do your own research. Right. So, what am I looking at this week? Just did my disclaimer. So, going to Koifin, right? What's up? So right now we got the regional banks. Actually, look, this is what I wanted to say. Like, say what you want about Trump or Kamala Harris. Look at when we were uncertain about the election, and then the next day, November 5th was the day of the election. The next day, look, everything went up, the entire market, right? Can you see that visually? Everything bumped up, even the weakest stuff, oil, healthcare, everything. The entire market perceived the election results as being positive for the economy, right? Like, believe what you want to believe, but this is where the money is going. So everything went up. The spaces that I'm looking at this week potentially are the regional banks, XLY, which is Tesla and Amazon on pullbacks, because Elon's meeting with the president every day now, from what it looks like. So I don't like. I've told you I don't believe in Tesla long term, until the humanoid story or whatever gets up. But man, he might get some tax credits out of this administration on EV vehicles and whatnot since he helped. So I don't discount Elon. He made the right bet. So yeah, I'll definitely swing. Tesla and Amazon are on my swing list right now. XLF. I'm in Wells Fargo right now. Candidly, I just showed you that in my trading account. So I do like the financial sector still on pullbacks. XLF specifically, I'm in a Wells Fargo trade, which I think is the strongest of the bunch that pulled back on Friday. That's why I hopped into that on Friday. The metals and the mining are up. So XME specifically and Alcoa AA. Just looking at their chart, and we'll pull up some of these charts. XLC, the biggest components of XLC are Meta, Google. What else is in XLC? Meta, Google, the phone companies, T-Mobile, AT&T. Those are kind of on my list. I got to look at the chart. We'll look at that. XLK, which is tech, right? I just showed you a lot of tech, NVIDIA, Apple. I don't know about Microsoft. Need to go look at that chart. XLI, and that's really where I'm going to be looking, is specifically in these sectors that are up like 5% SMH to me is still, the semis with the exception of Nvidia, still kind of sideways to me. So like I'm kind of staying away from SMH with the exception of like Nvidia, maybe TSM, and I'll go look at the chart. But all of these sectors with 5% increases or above, these are the ones that I'm going to be looking at for pullbacks. In fact, I'm already in a pullback on XLF that happened on Friday, specifically through Wells Fargo. Another view of this, and I've given you the information of kind of how to get to this. The first one is koifin.com. This one is SPDRS, spiders people call it, sector tractor. Sector tracker, not tractor. Just looking at the same thing, just a different view. Financials are up, consumer discretionary, XLY is up, XLC is up, industrials are up, tech is up. That's where I'm looking for pullbacks on next week from a swing trading perspective. And just going, let's build the watch list. Oops, sorry. Where am I? Share. So just showing you how I break up my charts with my flexible grid. If we want XLF, right? That's the strongest sector right now. What's popping? JP Morgan. It looks good on a pullback. Bank of America. Wells Fargo has been looking good. I'm already in that right now because it had a decent pullback on Friday. Look, the whole sector. So this is the thing. So I have some tools on here showing momentum and trend. And here are like the top 9 to 10 names in the sector, and they're all up, right? So this is what I want to see. Like if the entire sector is up, it like what you trade inside of here is less important if the entire thing, like if the entire body is going up, like if the entire ocean is going this way, it's going to be an easier trade. Now I'm not saying my Wells Fargo trade is going to be successful. What I'm saying is that it has a higher probability of being successful because look at the entire sector. Everything in the sector is up. Everything is trending, right? So if everything is trending, it really doesn't matter what you take on a pullback, like if the entire sector is going to keep going up. So XLF is really bullish right now. So that's my number one trade that I'm in right now. The financial sector, I'm probably not going to take one of these other names because I'm already in what I perceive to be the strongest name in the sector right now, which has been Wells Fargo. So I took that on Friday. What else was it was XLF, XLY. Do I have a chart? Damn it, I do not have a chart for XLY. Probably because it's just typically XLY is mostly moved by Tesla. So look at XLY post-election. Tesla on a pullback. Look at Tesla post-election. And see, when you're looking at structure, you got higher highs, higher lows. That's when you, like, Tesla is officially trending now. And while like as much as I talk ish about Tesla, I will take this on a pullback because it looks like what I like to swing. It looks like it's trending and starting to trend higher. So if this pulls back, like I wouldn't hesitate to hop into Tesla. Tesla is more volatile though, so I might be looking for a bigger price drop. I think on Friday it was at my entry point was at 271. I'll probably recalibrate that for Monday, right? But Amazon, same thing. They're highs again, and these are the two major components of XLY. So Amazon on the pullback. Look, this was my mark on Friday to get in and didn't quite pull back that far. But Amazon is still on my hit list right now. And then I think I looked at Home Depot and I didn't like it. Yeah, I didn't like Home Depot that much. It's still not trending. And it's not trending because look, these moving averages that I have are like going sideways. I want them to be going up like this. Home Depot was trending here. but now it's going sideways. So really, if I'm going to get into XLY, I want XLY to sector itself, or through Tesla or Amazon, whichever triggers or has a pullback. Tesla tends to have more of a mind of its own. XLY isn't that liquid, but actually no, these, if we get back to 207 or something close, these might be more reasonably priced, but the spread is crazy. So no, I might not trade XLY. Let me look at December 6th or the 13th. I might not trade XLY because of liquidity issues. So it would have to be through Amazon. Amazon has liquidity all over the place. Yeah, I would probably trade it through Amazon, probably with like a November 22 strike for next week specifically. Tesla is mad expensive. I would have to trade this with spreads. I would get into Tesla only with spreads because it's mad expensive. But actually, looking at the open interest on the put side is really weak, at least for November 15th and for the 22nd. I don't know. I would probably go Amazon. Right? Yeah, I think Amazon is the most liquid. So if I had to like trade one over the other, it'd probably go Amazon, Tesla, and I probably would leave XLY as a sector alone because it doesn't have any liquidity in the options chart. So we went through XLF, we went through XLY. Another strong sector was XLC, I believe, and XLK. So looking at XLC, Google, I would like to see it break this high. And mind you, I'm in Google with Leaps right now, my long-term accounts. I have 3 Google Leaps that are up like 5 or 6K in my long-term accounts. So I'm talking about swing trading this. I would like to see it break this high right here before I would swing trade it, because I want to see it make a new high. Then it makes it more bullish, and then I want to take it on a pullback after it breaks a new high. Netflix looks better, but the options are incredibly expensive. T-Mobile still looks good. Disney actually looks good. Damn, I should have took that Disney. Disney looks good right now, and usually is pretty liquid. AT&T is okay, and I don't really trade these down here. I just like to see what the whole sector is doing. But same thing, look at the sector. There are a lot of green boats in this sector. Like, so communications, like on a pullback on a lot of these names, XLC itself, Google, if it breaks this high, for me, Netflix that already broke this high, like on a pullback, but it's expensive, T-Mobile or Disney, right? If we go look at Disney, see, is there any liquidity? There's some liquidity in the options. Yeah, there's some liquidity in the options in Disney. You could find some liquidity there. So maybe the November 22nd strike, I don't know if there's a pullback though. There would have to be a pullback to a level where there's some liquidity somewhere up here. And then that might change this week. Definitely on the Friday's expiration, there's some liquidity. But yeah, I'm probably going to be watching Disney. I'll watch, what's XLC look like? I don't usually like these short swings. I usually like to be 2 or 3 days out unless I could take a spread. If I can get a spread, then I do like a short swing. So I don't like XLC that much. I do like Google if it can kind of break that old high. Plenty of liquidity in the option chain. Yep, on Google. I would love Google if it breaks the high and pulls back. What else is in the chart? Meta sideways. Netflix. I love Netflix, but it's expensive. The options are expensive, so I can only take it with spreads. But that is on my list to do a spread on. And T-Mobile still looks good. And so this is just me building my watch list for next week, right? And then so I'll go on Monday and just start setting alerts on these things. T-Mobile's liquidity is actually gone. T-Mobile might not have any liquidity either, though. So maybe not. Maybe not T-Mobile anymore. What about AT&T? No, it might just be Google in this sector. And Netflix.
What about gold? Are you still looking at gold?
Yeah, I talked about that earlier.
My bad. Yeah, jumped in late.
No, and I that was the main thing, was just talking about the gap down. Gold had a gap down due to the election. Everything gapped up because gold is primarily a safety play for a lot of people. So, just looking, hindsight being 2020, if Kamala would have won, gold probably goes back up. It's probably headed in this direction. Since Trump won, everyone took their money out of gold and then put it into the NASDAQ, S&P, the Dow, and the Russell. Like, just based upon like what the market is doing. And I showed everybody, like, looking at my long-term accounts, that's exactly what happened. I lost out on that gold trade, right? I had a huge loss on that trade, but all of my other stuff went up. Nvidia went up, my Shopify leaps went up, and my Google leaps went up in my long-term account. So that's what happened. It was a gap down. Hindsight being 2020, I should have noticed that the election was going to be a volatility event specifically for gold, and I should have been out on this candle, even at like a 5 to 10% loss on my conservative position. I should have been out. It's almost like an earnings event. I should have been out before the earnings event. So that's hindsight being 2020. But what I'm doing now, I'm already down like 80-90% regardless. So I'm just seeing, like, for me it's a loss, but I got 5 days till expiration for it to ideally come back to the top of this candle from like a technician standpoint. In fact, I have a alert set right there that I'm going to think about selling a portion of my position if it can get back up to here at wherever it is, because this is where there's probably going to be some more selling pressure that comes in. If you look at this as a ceiling, as resistance, because look at how many times it stopped there. So if gold gets back up to 2750, I'm selling at whatever it is to try and regain some of my losses. That's my game plan, and hopefully it does that sometime next week. Right?
Got it.
From a game plan standpoint. All right, Chris, you had a question?
Yeah, just a real quick question. This goes towards what you were talking about earlier for a volatile event.
Yeah.
So, what lessons have you learned from that? Have you changed the metrics of what you're going to classify a volatile event? Are you going to set any alarms or anything for events going forth in the future?
Well, typically, I always look every week, and like I said, I don't know what the hell I was doing not thinking that the election was going to be a volatility event. Forex Factory has a really good calendar, right? So for Monday, anything that's red is something that is a potential volatility event. But like, there's always going to be something. But like for day trading, these things are more important. But the most important volatility events for me are earnings. Like, I always get out of my trade before earnings report. So if, let's say, hypothetically, Apple's already reported, but let's say Apple's reporting on Tuesday in the morning, I'm going to be out of my trade before the market closes on Monday, right? If they report Tuesday after the market closes, I'm going to be out of my trade before the market closes on Tuesday. And then, like, you may even want to get out a day earlier, because a few weeks ago somebody leaked ASML's earnings report, so they actually released their earnings a day earlier because it was leaked. So if you were holding a trade thinking that you were going to get out before the report and someone leaks it, like, you had the volatility on accident, because that happens from time to time. So if you really want to be conservative, you want to be out at least like a day before the earnings report, or you might risk an earnings leak early, right? So that's number one, earnings. Dividend payouts too, like know what the dividend dates are. A lot of people are cycling into a stock or out of a stock when they're getting ready to pay dividends. Number three, FOMC meetings, big meetings of whether or not they're going to cut interest rates or not, which just happened last week on, was it the 6th or the 7th? I think the day after the election is when that happened, right? Anytime the Fed chair speaks in general can be a point of volatility, and important numbers depending on what the market cares about at the time. If the Fed says we're watching inflation closely and that's what's going to determine whether or not we hike rates or not, then CPI is going to be more important, right? These are inflation numbers. If the Fed says we're more worried about employment, then employment numbers and wage numbers are going to be more important. And that's actually the issue right now, is that the Fed has seen inflation come down, and now they're worried about staving off a recession. And that usually is related to people laying off a bunch of folks. So they're really worried about employment numbers. So if unemployment claims come in higher than expected, then the Fed's going to cut rates faster. It just did a quarter point cut. The first cut was a half a point cut. The second, this last one was a quarter point cut. And if unemployment claims are coming higher than expected, it might do a bigger cut. So that's what the market is reacting to right now. So these are like volatility events that you need to trade around. So, but earnings are, or some big news that's unexpected. Those are the things you can't really like account for. Like if it turns out that a CEO is being indicted for something and you had no idea, right? That's just bad luck, right? There's nothing you can do about that. But if you see that there's going to be an FOMC meeting about whether or not they're going to cut rates or hike them or whatever, get out of your trade. Specifically your trade, not necessarily your long-term positions, but if you're trading anything, like then you pretty much might as well just go to the casino and bet on red or black, you know? Get out of the trade. Like me, I'm following the trend. I'm following trend pullback. So ideally, I want to be in those trends when there's less volatility. So it's either going straight up or going straight down. Like that's my goal. So you just need to be aware of that. And then another thing too is I would have felt more comfortable going into a volatility event like the election or a FOMC meeting if I was already up on the position or had already scaled out of my position for a profit. And in this case with gold, I hadn't done that. So that was another reason for me to get out. Like I would be more comfortable sitting through a volatility event if I've already made money on the trade. And so since that trade was down 5 or 10% on that last position, I should have just got out because I was already down. I hadn't hit my stop yet, but I was already down, right? So those are the lessons that I've learned. And I'm still learning, but I definitely don't want to learn that lesson ever again. Right.
Yeah, that's my question for sure.
But those are the major like 2 or 3 events like you just need to be wary of. Before you enter a trade, you should know whether or not a stock is going to have earnings soon or not.
But now that you know that an election is about a date, is there any other event or something going on in the world that you can predict ahead of time that's similar or on par with that event?
Not really. They release a calendar every week. The one I just showed you that tells you the stuff that's going to happen that might push the market up or down, depending on what you're trading too. Like if you're trading oil, you might want to look, like they release crude reports, I think once every week or every month or something like that. So if you trade oil a lot, you might want to look at that stuff, you know, and or be out of your trade before the data releases, you know. So,
was the election on that list? I didn't see the election.
No, it wasn't on the list because of course everyone knew about it, but I just wasn't thinking about it. It's definitely a volatility event, especially on gold, which is like a hedge for a lot of people.
So that's what my question is. Are there any that are not listed? You know, any unforeseen, kind of like that, how the election was on there.
Well, there are a lot of, like war. Like they don't announce when war is gonna happen, you know. But like a bomb just dropped somewhere, and then we get a CNN report or AP report that says, "Oh, by the way, Israel and so and Lebanon are at war," you know. Like we don't know, and then oil goes up, and then all of the defense stocks, the Lockheed Martins and the Raytheons and the General Dynamics stocks go up, you know. So it's just, yeah, you don't know some things. You can't like you have no idea. Like for instance, SMCI, right? I think we had been talking about this stock earlier in the year with the semiconductor trade. Look at this thing. Woo! Right? This thing was supposed to be the next Nvidia. Why wasn't it? Because their accounting practices were a little suspect. So they were telling everybody right around this time how much money they were making, and then it turns out their accounting practices are suspect as hell. Allegedly. Right? And their CPA dropped them the other day. And that's what I think led to this massive drop. So that tells me that they're doing something fishy with their books, allegedly, right? So this is also what could happen. But if you're in this stock and you got in at the height, you have no idea that they were cooking the books, you know, allegedly.
That's funny.
Right? So, like, you know, sometimes you just don't know. Like, you don't know, like, because you don't run these companies. You're not in the meetings every day. You're not in the board meetings unless you got billions of dollars or hundreds of millions. Like, so, yeah, it's just and this is another reason why you should never put your eggs in one basket, right? Because if you just look at my account, I am down on ASML, I am down on ELF, and then on this gold trade, but I'm in a lot of other stuff, and those are up. And I'm not going to be up on everything, but shit, I'm up 37K this year.
Nice.
Right? So it's just like, don't put all of your eggs in one basket. And I sized up on Nvidia. Y'all saw when I made that trade on Nvidia. I sized up. It pulled back. I got in at 106 and 108. And it's more so because I thought this is a company in the future that I think is going to be bigger in 5 years, and it's already huge. So I sized up on it, and I held through all the volatility because, like, I want to keep this for 5 to 10 years. But that was the best long-term move I made. It's up like 10, 11 grand now. So yeah, and then like Shopify, man, like, yeah. And see, I still have some time on these leaps. So some of them I'm taking leaps too, like where there's liquidity on the Shopify. I took 3 leaps here, took 3 here, sold one at a level. It's actually getting close to a level. I think my price was like 90 or 97, and it's been climbing. So if it gets there, I'll sell another one and then hold it a little bit longer. But you know, we're getting a little close to expiration. Not like super close. It's still 6 or 7 months off. But time decay is going to start affecting these as we get closer to expiration. So that's when I'll start thinking about unloading these positions. Same thing with Google. Unfortunately with Google, I didn't scale in like I should have. I wish I would have took more because this trade, these 3 are up like crazy too, you know. And with my long-term investment strategy is mostly find really good companies that have good fundamentals that pull back to their 200 exponential moving average. That's where I want to enter. Or to like a 50% off fib level or something like that. That's where I want to enter. And anything anybody else want to look at? I think we kind of went through my watch list. Oh, I didn't get through XLI. So XLI, I think, was the last sector that I was interested in, and then maybe XLK. Looking at it, I like XLI itself, and maybe Caterpillar. That might be it, though. Everything else is kind of suspect. And in fact, if we were talking about trade, I actually liked how the other sectors looked more than XLI. So I might actually leave XLI alone because I would prefer to be in what XLC looked like, what XLF looked like, where everything was going up. XLK even looks yeah, it's just Nvidia. CRM looks really good. Oracle and Cisco. And look at AMD. I would stay away from AMD. And the reason why I would stay away from AMD is because on a day when everything was going up and the market's moving up and tech is moving up and it's going the opposite direction, that doesn't look good. Like, it should have had that same election pop that everything else did, right? Because look on the election date, it didn't get any pop versus what Nvidia got. And same thing with Microsoft. Microsoft is very sideways too. So yeah, I think financials, the communication sector, those are better sectors for this week. And then maybe some individual names like Nvidia, Oracle, Cisco. Those all look good. I had a trade that I kind of got stopped out of break even on Cisco, but Cisco's been pretty steady, but it's been a little volatile. But I would be in those names. And then in the semi sector, just Nvidia and TSM, really. And even TSM doesn't look that good anymore. Really just Nvidia. That's it. And then looking at sectors that look really bad, healthcare. So if I were to short anything, this is where I'd be shorting. Not that I'm shorting anything because the market is overall bullish, but look at like all of these negative trends in healthcare. All of the safety stuff, right? This is safety stuff. So look at how it reacted on Trump's win. The safety stuff, actually UNH went up, but a lot of these other things, healthcare, the safety stuff went down, right? Just looking at the sector, it popped a little bit and then came back down, right? Because everything popped. And then consumer staples too, which I made some decent money on this year, it's negative. A lot of things are negative, with the exception of Walmart and Costco, which are my favorites. But look at Pepsi, Coke, Colgate, Target, right? Negative. So these are best in the sector. That's why I own Costco. I tried to own Walmart, but Costco pulled back first. But these are my top two in the sector and consumer staples. All right, so just recap what I'm and then XLY, that's right. I'm trading next week.
Sorry, quick question. Did Costco ever pull back to a 200 day moving average or 50% on a fib level?
I feel like it did because that's when I got in. I definitely got in. Or no, it pulled back to a 50, I think. Because look, at the time, I generally like things when they pull back to the 200, but then Costco doesn't ever do that. Right? So I saw it was responding more, and this is like technical analysis. I saw it was responding more to the 50, right? It's been bouncing at the 50. It hasn't been. I think I got in around here.
Gotcha.
Because it probably one of these dates, and I remember it wiggled down a little bit, but then it came back up. But I saw Costco was responding to the 50, so that I almost think my entry point was on that day. Right. And so from a technical standpoint, yes, I do like getting in things at the 200, but if you're waiting on Costco to get back to its 200, you would have been waiting, what, a year and a half, 2 years?
Yeah.
Right. And then Walmart's even worse. I've been trying to get into Walmart too. I wish I would have got in right there.
Man. Me too.
Right. So for me, yes, my standard is I want to get in at the 200, but if I see something consistently bouncing off of 50, that is more of the proxy for it, right? If you would have got in right there, this was, and if you would have waited, like this was what, December 2023, So like a year, you'd have had to wait a year to try and grab it at its 200. But since then, it hasn't been back. It's been checking back to the 50 and keep going back up. So that's just, I'm saying, just in terms of how I'm entering stocks or why I'm deciding to do that. But that Costco play was pretty smart. Right now it's looking pretty good from a long-term side, and I just think Costco is going to keep earning more money. So that's generally when I'm looking, like I said, my long-term account. Like, I'm holding stuff. Like, I'm not looking at fundamentals for these swing trades. I don't care about the fundamentals of the stuff in XOY that we talked about, or KRL. That's the one thing we didn't look at. KRE, the regional banks. On a pullback, I was looking at that on Friday too. I don't care about the fundamentals on KRE. I don't care about XOY fundamentals. I don't care about the fundamentals on Amazon and Google for next week. I am in Google on Elite, but like, I don't care about that because I only plan on being in that trade for a max of a few weeks. When I am putting something in my long-term portfolio, I am going through their earnings. I am going through their reports. I'm looking to see how much cash they have on hand. I'm looking to see if they are fundamentally sound, if they go in my retirement accounts where I expect them to do well for the next 5 to 10 years. But when I'm swinging something like, and a perfect example of that is Wells Fargo. I don't want to own Wells Fargo in my long-term account right now. But from a swing standpoint, it looks good. It looks bullish. So I will trade this, but I won't invest in it. Right. If I were to invest in anything in the bank sector, it'd be JP Morgan. Look at that chart. I love that chart. JP Morgan is best in class, but that thing never comes down to its 200 either, because I've been waiting on that one too. Same thing. October of last year, you'd have had to wait a year versus picking it up at the 50. Some bullish stocks don't get down that low. Nvidia, same way. I think, I don't know, did we get, no, Nvidia did pull back, I feel like, to 200. Almost. It almost got there. I think it was at a fib level when we pretty much picked it up. But yeah, some bullish stocks will never get back down there. So you got to take take a flyer on it at a higher level or at some other point of support that it's been showing, either through trend lines or moving averages or fib levels. But I couldn't be happier about the Nvidia position right now. It's making all-time highs again. It just made a new all-time high. I only wish I would have picked up more.
Me and you both.
Right? And literally, and like, there was no way. I literally took the rest of the money I had in my retirement accounts at the time that was just like cash, and I just threw it all on Nvidia. I was like, it got down close to my levels. It dipped down further. I was like, oh, I've been waiting for this thing to come back, and I was like, I bought 275 shares in like in a week's time, But
Nice.
it worked. So, and that's another thing that I'm learning too, especially in my longer term positions. You gotta size up. Like, this here is one of my best trades I think that I've ever made long term from a percentage standpoint, but I only bought 15 shares. So from a profit standpoint, it has only made me $600. I should have sized up on it. XBI is at what's the price level? XBI is at $104, and I bought it at $65. But I didn't size up. So that's when I learned my lesson. Like, it doesn't matter even if you buy something that's going up if you don't size up on it with some conviction. So imagine if I would have took 170, 100 shares of that when it was at $65 and now it's at 104. I would have made a lot more than $600. So, yeah. But
Yes, sir.
yeah, but also size up based upon what your account size allows. But Like, figure out what that is and size up when it's time to size up, you know? All right. Anything else y'all want to look at before we end?
No, but I want some of the mo trades in the chat this week. I
know,
heard
but
you, so
I know
I
there
need
are a lot.
I need them thrown in there this week.
I'll show you. Well, before we leave, I'll show you the other one that I took. IYT is a transportation ETF that kind of fit my criteria. Look, higher highs, so it's trending, and it pulled back on a red candle after that gap up after the Trump win, right? And I got in right there, so I am in IYT as well. These are a lot of like the transportation, Uber, airliners, stuff like that, you know. And so I did hop into IYT. That one's pretty much break even, a little bit less than break even right now, but it's holding. And like I said, Wells Fargo, same thing. Big gap up, big red candle down, hopped into that. That one is actually up a couple $100 right now. But yeah, those are the sectors that I'm looking at. And I gave you my watch list. I'm just saying every single day, go figure out what the ATR is on the stocks that I just gave you. And if they pull back significantly, figure out where you want to enter. Is there a good level where you want to enter? Another thing I've been using recently is something called volume profile. So like Wells Fargo specifically. And it depends, like there are other platforms that have a better version of this tool, but I like to see specifically on my swings, like over the last 20 days, where has all the volume been, right? And those are like better levels for me to buy at. So over the last 20 days, all the volume on Wells Fargo has been around like 70. And so that's where I wanted to enter approximately. In fact, I think I entered a little further down here. I'm almost certain I entered like around here. Somewhere down at this level, I saw that level forming and I got in around here. And I just saw, look, there's no more liquidity after here. So like there's not going to be anybody selling. This is a representation of who's been buying and selling at particular levels. So I was like, oh, like if we get down here, like this is kind of an edge, so I want to be buying close to that edge. And then if we can break through this liquidity here, then like Wells Fargo is probably not going to stop until we get to this other big bar right here on volume. So this is where like the institutions are buying. So that's going to probably be where I try to check out and sell half of my position before all of these other sellers come in right there. So it's just something that I've been adding to my trading, is trying to figure out, is there a better level to buy at down here? And hey, is there a good level to exit at? Because there's a lot of sellers that are going to be waiting right here, you know. And that's the volume.
What's that called that you have there for your charting that you're saying right there that you know that? What are those shadows then? What is that called?
It's called the volume profile tool.
The volume profile.
Can you see my screen, the studies and strategies?
Yes.
So it's a volume profile tool. But on Thinkorswim, it's based upon like the chart that you have. So for instance, if you have a volume profile tool and your chart is 20 days and 1 hour increments, it's going to do the volume over the last 20 days. If you're here on the 5-minute chart and put on the 5-minute chart, it's only going to do it over the last 2 days. If you do it on a day chart on the last month, it's going to do it over the last month. There are other tools like TradingView and other platforms where this tool is a lot better and more dialed in. But for me, that's usually my window. I'm not usually holding a trade for more than 20 days. So I want to know where all the buyers have been and all of the sellers. And like, this is a point of control right here. Like this is where most of the buyers and sellers have been over the last 20 days. You see how big those bars are in comparison. Like, so if it pulls back there, I might size up a little bit more because that's going to be really good resistance, because that's where a lot of the buyers came in last time, right? So it's just supply and demand, really. So it's helping me with like supply and demand zones.
Got it. I like it.
Right. All right, that's it for this week. No commas, Sunday service, making it rain without the umbrellas. Till next time, 8 a.m. If you want to be on the Zoom and ask questions, hit me in the chat or DM me. Or not in the chat. I would say leave a comment or DM me, right? That's it. That's all I got for y'all today. But just showing y'all my worst loss of the year. But it happened to come on my best day of the year in my long-term accounts. So, you know, it is what it is.
Appreciate you, brother.
Yep. All right.
Man, thank you.
Peace.
Appreciate you, man.